So we're talking about buying our next home. I own a home. I want to go buy another home, but most of my money is in the home that I currently live in.
Right.
So what options do I have if I want, and here's the thing, if the market's competitive, we're not going to be able to go out and have contingent offers accepted, especially if my home's not on the market, if my home's not under contract.
Right.
So I want to be as strong as I can in a tough spring market to go get like my dream house. This is the end.
Yeah.
So what are some strategies that I can put together without putting my home on the market and doing the whole contingency thing?
Yep.
I can qualify for both. I just don't have the money yet. I don't have the down payment yet. So how can I come up with that down payment without putting my home on the market?
Yeah. I think the big thing, if you can qualify, that's the big key. If you can qualify carrying both, you definitely have a bunch of different options available. Again, back to conventional, you can do as little as 5% down, and we did do a couple other videos on gift and 401k loans. Those are pretty simple strategies that, in theory, for the 401k, for example, you could borrow funds for a home purchase from your 401k, use those to get to, let's say, 5% down on the new home, and then when your house settles, your current house, you could repay the 401k loan immediately, and not even lose out on the market gains.
What about, so you just said that, and so what about two loans? So if I'm doing an 80 and a 15 and putting 5 down, I sell my house, I can pay off the 15 right away as soon as my house is sold. I know that used to happen. Is that stuff still going on?
Absolutely, yeah. First and second mortgages are common. The only drawback to doing it that way is that around 2011 or 2012, they added pricing adjustments when you have a second. When you do a first with a second at the same time, your rate is going to be higher than if you just had a single loan.
Your rate on the 80?
On the first loan, yep.
Oh, okay.
So you want to run the numbers, but sometimes, in fact, doing a mortgage insurance scenario is better, and then you don't have to worry about the closing costs or the processing time on a second mortgage. But yeah, absolutely, the 80-10-10 or the 15% second, those are common and still going today. And then similarly, if you happen to have enough equity in your house as well, you had an equity line on your current home, you could actually use those secured equity line funds as down payment on the new home, if you happen to have a home equity line on your existing home. All right.
So it sounds like equity line if it's there. If it's not, you can possibly create one. That takes a little bit of time to go through that process. So it'll delay you a little bit. But equity line, gifts, 401ks, and the whole idea is you go get your new house, you stage, you market, you sell your old house, you pay back wherever you took that money from.
And worst case scenario, you kind of buy your new house with not the ideal loan, and then you just do a no cost refinance later, 6 months down the line, once you've sold your current house, and then you get into the long-term loan. There's a little bit of risk depending on where rates are headed, but to get the dream house, to make it work in our super competitive market, sometimes you have to do that.
All right. So if you own a home, you want to go find the next, you need some ideas on how to come up with the down payment. Talk to your lender. It sounds like they know what they're doing, and they have multiple options that you could go through and you could figure out in order how to easily get your next one and then worry about your old home after that.
And I will say, when you're working with good agents as well, it goes smoother. They're able to sell your home quicker. You're not out in the cold with two mortgages if that's not really what you want. So.
Yeah, and let's be honest, if you're doing it here in the spring, it's stressful because you own two homes, but your home's not going to sit around for too long. And most of the time we're talking about a townhome to a single family home, and townhomes go up like hotcakes in the spring. So even though it's scary and it's stressful, it really is something that gets done pretty quickly.
And I see it a lot where we set up the loan one way to make the offer look better, but you still settle on your house currently, and we 2 weeks before closing, we can switch the loan if your house happens to not
and that's a
settle.
good point. You could be on the market. You could be under contract. You're just going non-contingent.
Correct.
Is what you're doing.
Yep.
Sure.
And there's ways to work with your lender. Plan A, hey, we're going to plan on our home not selling, but if everything goes through and it does sell, we can switch to plan B, and that's
perfect.
also helpful.
Yeah, perfect. We'll get it done for you.